appreciative of our ability to have you with us today. I think for all the people on the line, and these are all folks representing credit unions from throughout the state of Vermont. Most, not all, but most of the credit unions of Vermont have a fairly broad geographical field of membership.
That's our understanding. Yes, that's great.
Right. And so many of them are represented here today, and we thank them for joining us as well. You know, I don't think any of you on the line, and thank you for joining us today, need a lengthy introduction to Ncua board member Hood, because that's a name that you've seen around for quite some time now, since his first appointment to the Ncua board, if I've got it right, in 2005, I think it was.
That is correct.
Where he was vice chair for a number of years, and then had a break for about I want to say it was a decade or so.
About a decade. Well, I went back into financial services, and who would have thought I'd come back to see you all?
Exactly. And then getting reappointed to the board in 2019, and was chair for almost 2 years, I think it was.
It was about 2 years, give or take the pandemic.
Right. Right. Well, the pandemic has changed a lot of things, and kind of had us all lose track of time too during the past 2 years. So again, thank you everybody for joining us, and thank you board member Hood for being on the line with us today. You know, I want to first, for some housekeeping, if everyone could keep your line. You've all done this enough that you know you should keep your line muted until you want to ask a question, but I do want to encourage you all to comment or ask questions along the way as the mood strikes you, or use the chat box if you prefer, and I'll try to monitor that as we go along too. But I thought we'd start out by just letting our guest share with you what's on his mind these days, and then we'll kind of roll with it and take it from there, if that's okay with you.
It sounds great to me. And again, I don't want this to be a formal speech. I really want to have maybe some minutes where I share what's on my mind, what are the things I'm working on, ladies and gentlemen, and then hear from you all. You all are where it all happens. So I just want, first and foremost, want to say thank you for allowing me to address all of you there in the Green Mountain State. It's hard to believe that it was probably about 30 plus years ago that I got a chance to learn how to cross-country ski there in your beautiful state, there in Craftsbury, Vermont. I think I must have had too much of that apple chill cider to remember it. But that was a glorious time, and it was around the holidays that I was there. So you live in a beautiful place. And Joe, I do hope that one of these days I will get the chance to come and see you all in person as opposed to seeing you today via Zoom. Before I begin, I also want to do a shout out. I know you all have been gracious and kind and invited me to speak about what I do as the former chairman of Ncua and now as a board member, but I would be remiss if I didn't thank the great work that we have in partnership efforts with Mike Pichek and all of our folks there from the state of Vermont. When we look at our credit union system, whether they're federally chartered or state chartered, at the end of the day, it's about us all working together in partnership to really provide opportunities for people to have access to safe, affordable products. So I want to just thank our folks and friends there, such as Mike Pichek and his team, for the great work that we do each and every day in partnership. You all, first, I would just like for you to know that I'm glad that you all are healthy and well. We've all been through a lot lately. As we were saying at the onset of the call, we as an agency have been working in a remote posture since the third week of March of 2020, and we are still in that remote posture today. But yet still keeping our eye on the ball and still trying to provide you all with the level of service that you need from your prudential credit union regulator. But aside from keeping our credit union system safe and sound, at the onset of the pandemic and even to this day, my main concern is about you all and your family. So I pray that you all are staying healthy and well. And I know when we think about the prognosticators, many of them never assumed that we would even be able to even come back to a modicum of normality, meaning that Joe and I were able to see each other in the ACU conference. I was able to speak at the Q's conference. I think had we let the prognosticators have their way, we would not be vaccinated, would not be traveling, we would not be addressing the needs of America's credit union members. But fast forward to today, when we have gotten through, I'm hoping that once we get to the Omicron, that we will be able to get back to a new normal or a near normal or whatever the pundits are calling it. But amid all of the headwinds, ladies and gentlemen from the Green Mountain State, credit unions have done better than ever. When I look at the third quarter call report data that was recently released to you all, and that is through September of this year, I'm very pleased to see the growth of our credit union system now over 5 million members have joined credit unions within the past year, now serving about 127.2 million member owners. I'm also pleased with the fact, you all, that assets now are well over $2 trillion. But the figure that I'm most impressed with is the fact that our lending activity is now about $1.7 trillion collectively. And that means that credit unions are using all of their tools and resources to give people the loans they need to buy homes, giving them the loans they need to buy cars to go to and from work, and giving those entrepreneurs the loans that they need to keep sustainable, viable businesses. Nowhere was that more apparent than with the 300,000 plus credit union loans that they made for the PPP program. So I want to just say that by all accounts, the economic indicators are very robust. In addition to the growth in members, the growth in assets, we've also seen very high net worth levels. Net worth now approximates 10.7%. That's some 370 basis points beyond the statutory requirement of 7%. We also have seen a diminution in loan deterioration, meaning that our charge-offs and write-offs have declined year over year. We also are seeing a slight uptick in return on average assets of about 112 basis points. So with all of the things that we've had going with the headwinds of the pandemic, the unrest in some of our urban areas, in the midst of it all, credit union leaders such as you all have been able to really keep our system very safe and sound. And notably for you all there in the state of Vermont, I mentioned the 2 trillion assets that we have posted collectively, where you all have contributed about $6.3 billion in total assets that you've pumped into our credit union system. When I talk about that asset growth that now has spiraled to about over $2 trillion, well, yes, collectively that growth was about 12.9%, but you all, the leaders such as all of you all in today's call, you've really exceeded our national average. In fact, your growth rate was 15.1% for the state versus our national average of about 12.9%. Similarly, with the loan growth, which I'm proud to know that credit unions are lending, your loan growth was about 7% compared to a national average of 15.8%. And then you've also had about a 16% increase in deposit growth, while the national average was about 14%. So again, you all in Vermont are doing yeoman's work and keeping your eye on the ball towards safety and soundness. It's because of the great work that we're seeing collectively in the credit union system that gives me great comfort in knowing that I think we have the resources and tools that we need to, I hope, get ready for the pandemic, the end of the pandemic. I'm hoping that we get ready for the recovery. And one of the guiding factors I see there is not only are we flush now with liquidity, about $220 billion plus in liquidity through short-term assets, but also you all, the fact that we have a very strong credit union share insurance fund. We have a very strong equity ratio. The equity ratio now, in my opinion, means that you're not going to hear me saying that we need to assess a premium on any of our credit unions at this juncture. So the indicators are there, which means that we can move forward and I hope continue to serve our member owners. What are some of the supervisory priorities that we're going to be working with you all on in partnership with the SSA, or things that we'll be doing individually with our federally chartered credit unions? We're going to continue you all to focus on cybersecurity. In this remote work posture and given everything that's going on, we need to make sure that we're working with you all to help batten down the defense mechanisms, to make sure that you are really doing all that it takes to have a very strong cybersecurity environment and practicing what we call good cybersecurity hygiene. We have launched, and if you go to the NCA website, we've launched a new tool called ASET. It's the Automated Cybersecurity Examination Tool. And it really allows you to look at what are the resources, what are the things that you need to have to build a best-in-class cybersecurity program based on the size and complexity of your credit union. So that means that if you are a multi-billion-dollar credit union, you're not going to be expected to have the same level of expertise that a $3 million credit union does. But at the same time, it's about having a tailored approach, again, based on size and complexity. So cybersecurity, we just encourage you to really focus on that because I know our examiners are. Similarly, we continue to focus on data protection, data privacy. And again, I know that you all are focusing on this, but just as you're bringing on your new employees, just continuing to safeguard the personal identifiable information. Other areas that remain important, again, as the Bank Secrecy Act and knowing your customer. Yes, I'm very pleased at that $5 million increase in member owners of our credit union system, but I want to make sure that as we are bringing them into our system, are we going through all of the appropriate onboarding factors? Are we really verifying the identity and doing all that it takes to keep the American homeland safe? So again, some of our supervisory priorities are cybersecurity, data protection, data privacy, KYC and BSA. And then I think another piece that I would like to share with you all, and that's the importance you all of two things: interest rate risk. Are you really looking at your interest rate risk on your balance sheets and duration, and how are you mitigating those types of activities? And then the other piece I would be remiss if I didn't talk about CECL, the current expected credit loss model. You all, I don't need to tell all of you in Vermont, I was one that was vociferously against CECL coming to the credit union system. Well, it makes sense for, I think, larger banks that are further down the road from you all in New York, whether it be Goldman Sachs or JP Morgan, but I don't think that our credit union system really needs to be a part of it. Be that as it may, whatever my thoughts were, we could not get them to remove CECL from credit unions, with the exception of those that are 10 million and under in assets, because they don't have to follow the GAAP accounting. But what we have been able to do as a palliative measure for all of our credit unions, and that is giving you the ability to phase in the CECL over 3 years, commencing in 2023. So that means that you won't have to have those loan loss reserves flow in year one through your income statements, but you're going to be able to do that over 3 years, which we hope will soften the blow there. In addition to CECL and it being rolled out in 2023, we're going to be giving you a lot of guidance, a lot of outreach. We're not just going to say, there it is, now be fruitful and multiply. Rather, we're going to be doing a lot of ongoing education, outreach events, and again, wanting to make sure that we equip you for success. So those are some of the main supervisory priorities that you will be hearing about in the coming months. We did just on yesterday issue what we're looking at as our regulatory agenda for next year, where there are going to be some rulemakings under loan participations, loan obligations. So you're going to see that, we're believing by next April. And also AVMs, the automated value mechanisms that have been used for real estate appraisals, the AVM tools, and how do you really use those tools such that underserved communities are not disproportionately impacted when it comes to some of those valuation models. So the automated valuation model will be something that we'll be looking at next year, and that letter just came out. So I've talked about supervisory things. I've talked about the great state of being that we are in the credit union system. Well, then what am I working on? What are some of those priorities that I have that I think you want to hear about? First and foremost, not cybersecurity, but fintech. Fintech is an area that I think is critically important for the lifeblood of the credit union system. If there's anything that we've seen play out over the past 18, 20 months, given the pandemic, those credit unions that invested in technology, those credit unions that had digitally native platforms were able to continue to serve their members and not have any hiccups at all whatsoever. I want to continue to make sure that you all know that I want to make sure that you have the regulatory framework and empowerment to use technology. Every day, you all, I meet with a different fintech company that's doing things around expediting the lending process for mortgages, auto loans. In fact, there's a group called Motor Refi. If you've not heard of Motor Refi, they will take and refinance loans that have maybe been for autos at 9 or 10% and help credit unions refinance those loans. And in so doing, the credit union gets to get a new member and someone they can bring into the credit union system. The name of that company is Motor Refi. Another group that I've met with often is House Canary. They're able to do a real estate mortgage appraisal in about 48 hours using machine learning and artificial intelligence. I meet with these vendors, you all, because I think that they can play a key role in giving you all the speed and all the services that you need to serve your members. And I recognize that given the cooperative nature of credit unions, QSOs can play quite a role in that. And I know you all support QSOs in Vermont. That's why on one of our recent board decisions, I was very proud of the fact that we broadened the powers of our QSOs, because in so doing, it helps you. So I want you to know that fintech is something that I'm going to be taking seriously in my remaining years on the board. We are going to be creating an Office of Innovation and Access where there will be a fintech director who can even assist you all with some of the questions you have regarding cryptocurrency or digital assets. yes, we are going to be working with you all to ensure that if you want to provide digital assets to your members, but then so be it. Who are we to say that you can't? You need to be able to respond to your members. So you will be getting some additional guidance and clarity in the days ahead from Ncua regarding how digital assets can and should be used, and what are some guiding principles that we're going to have for you there around fintech and cryptocurrency. Another area, you all, that you're going to continue to hear me focus and champion, and that is, how do we serve our underserved communities? How do we help the folks that where we have 40% of American households who can't obtain $400 in an emergency? How do we help those 45 million individuals for what we call credit invisible? So you all, I'm going to look to you all to continue to make sure that you're making small dollar loans to these underserved communities. Are we also embracing the tenets of diversity, equity, and inclusion? And I recognize you all, when I talk to Vermont, I recognize that your geographic numbers don't really show that there's a lot of what we would call racial or ethnic diversity. So my challenge to you is, are we looking at aging populations? Are we looking at rural, tribal, and are we looking at disabled or differently able populations? So as I tell folks, diversity, equity, inclusion, though it's important, I think many people tend to look at it through the racial lens, and I try to look at it very expansively. And in case you're wondering, I even had a similar conversation with the African delegation of regulators that I addressed recently, and I talked to them about DEI, and I said, yes, I know everyone there in the continent of Africa looks like all of us on this call, but that means that you need to look at tribal, rural, disabled. So again, looking at these issues expansively, I think is so critically important. Another area, you all, that I'm going to continue to focus on and work with you all, and that is making sure that you have a sounding board. So I do want to create an advisory board, not that we need to have a formal body, but I want to have a structure in place, you all, where you all can help advise us on what are your desires around this future of fintech? What are the things that you want to see around expanding mortgage opportunities, whatever the case may be. So I want you all to have a voice. So I am working diligently with the other board offices to see if we can create an Ncua advisory board that would be in keeping with similar boards from the FDIC, the OCC, CFPB, just to name a few alphabets, you all. But again, it's about giving you all, as democratically controlled, little d, financial cooperatives. I want to make sure that we're continuing to give you that voice through a framework that we can capture those thoughts and act on them. And then the last piece before I open it up to questions, you all, and that is this. I'm going to be working diligently to make sure that our budget that we're going to be working on to approve tomorrow is mindful of the fact that it's your money. We're looking at a $345 million spend. A lot of that will be devoted to IT and things of that nature, but I want you to know I don't miss a beat when it comes to recognizing that we need to be good stewards of your resources. We are a self-funded agency. So that means that $345 million is coming directly from you all and credit unions. And we want to make sure that we're being very judicious in how those funds are deployed. So I'm holding staff accountable. We're questioning spends that may not be as germane as they once were, just to make sure that we are really keeping an eye on the budget. One thing that I am promoting, and I'm hoping that we'll get some action on it tomorrow, and that is we have a bigger operating surplus, and I think that's necessary for an agency our size. So because that surplus is larger than I think it needs to be, I'm looking to give you all anywhere from $15 to $20 million back. That means that your credit unions will, if I get it my way, I want you guys to get an old-fashioned check or maybe some type of remuneration that way. Worst case scenario, so if we are giving you the money back, it may be just an offset when you do your next 1% deposit. But the main thing is, I believe that it's time for us to give you some of your money back, because just as we are looking for the future, so are you. That means that you may want to invest in some tools, some fintech things, cybersecurity things, and what a better time than to get some funds that we no longer need at this juncture. So keeping an eye towards a very effective but lean budget. So with that, you all, again, if there's anything I can say, I'm excited about continuing to serve on the board. I'm excited about seeing the success that our industry has experienced amid those headwinds of the pandemic and the racial strife and unrest. But in the midst of that, credit unions have harkened back to their days of adversity when they grew out of the Great Depression, and that is continuing to embody the people helping people ethos. And I know that certainly it's been readily apparent there in your state. I do look forward to coming there to see you all for a roundtable, to maybe visit some of the the credit union businesses. I mean, some of the loans that you've made to those Main Street businesses. And again, let's cross our fingers between now and next year. So with that, you all, thank you, thank you, thank you, Green Mountain State.
Thank you very much, Rodney. Great to hear your initial thoughts and issues that you're working on and whatnot, and the possibility of, or at least your intent with that announcement of maybe a chance of a holiday gift to credit unions from the agency, at least if you have your way anyway.
If I get it my way, yes, so we'll see. And I think we're closer to that happening. We'll see. And you're right, it will be a nice gift from Santa.
Thank you very much. Okay, let's open it up for comments, questions, whatever is on your minds, folks.
And I know I've given you a lot, and there may be some things you'll say, well, you didn't mention this, but it may be on your mind. So again, that's the beauty of either having these types of roundtable discussions or the advisory board concept of the future.
Anybody want to jump in?
Sure, I'll start. My name's Bob Morgan, CEO of North Country Federal Credit Union. Thank you. First, thank you so much, Board Member Hood, for taking the time to address us. It was excellent comments, and we always appreciate the interaction. I just wanted to say that, you know, your diligence in questioning and scrutiny of the staff proposed budget increase of 3.6%, I think, and kind of a little bit of the pushback on that is something that is recognized and really appreciated by credit unions moving forward, because, you know, it was a very successful year financially for all credit unions, or most credit unions in 2021, but there still are financial pressures as we move forward with net interest margin and a variety of other headwinds. So those things really matter, and I just wanted to say thank you.
Well, you are indeed welcome, Bob. And again, wish I could come there soon and visit your credit union. Where are you headquartered in the state?
In South Burlington, Vermont is our headquarters. We have membership available through the northern 10 counties of the state of Vermont and 2 counties in New Hampshire and 1 in New York as well.
Well, very well. Well, I certainly do hope to get up there sooner than later. And again, I look at a lot of my work as that of a fiduciary. I have a fiduciary responsibility to all of you. So continue to count on me for that. So yes. And also, as I mentioned, share insurance fund is very strong. Our equity ratio is strong. So again, negating the need to even have any discussion at this juncture about a premium assessment. So again, and if that were the case, you all, I certainly would not want to impose it upon you in the middle of a pandemic or even the recovery. So we do have latitude when it comes to those types of things. So again, my job, I think, as a good leader and someone that really wants to just motivate you all to continue your service, it is just to empower you to get out of the way and let you all do what you do best, and that is serve your members.
Thank you again.
Mm-hmm. You're welcome.
Board Member Hood, this is John Dwyer. Nice to talk to you again.
Hey, John, I haven't seen you in a while. Good to see you as well.
Yeah, I think we caught up when it was much more stressful last summer in the beginning stages of the pandemic. But I want to follow up on your point just a moment ago regarding the not needing a premium. Mm-hmm. I certainly I think many of us support that position. But I'm curious if you had a sense or a thought around in what situation would there be an appropriate need for a premium if it's not during the pandemic. Specifically, I'm referring to the kind of growth in deposits that we've all experienced, and some of those other frames you mentioned earlier. Lower delinquencies, higher levels of capital. So, do you foresee a premium when we get hopefully on the other side of the pandemic, or your sense of that?
You know what, John? If I could be that much of a soothsayer, I would leave where I am here in the office, and I am getting you a ticket, and we're going to go to the Wynn in Vegas. And we're just going to have me be the soothsayer. I can't predict that, John, but what I can say is with some of the indicators that we have now, the share growth, yes, we've seen a diminution in some of our net worth ratios. But again, you all, even with the share growth and even with some of the prompt corrective action reform measures that we gave you all, meaning that if you were below that 7% and you were in satisfactorily with the satisfactory risk rating, that you were then able to work with your regional manager to have the restoration plan. So those were even some relief measures that we thought that were necessary, because it wasn't through anything that you all were doing wrong that you were having this diminution in capital. It was more because of the uptick through PPP loans, through stimulus checks, and the list just goes on and on. So thank goodness we have the real-time data to know when the share growth has caused some of the strain on balance sheets as opposed to just poor performance. And that's why we are very careful when some institutions would tell us, well, hey, we're not doing well because of our uptick in shares. Like, no, you've not been doing well for years. So we are able to sort of bifurcate what's going on, especially as it relates to the pandemic. I think the main thing is if the ratio does fall below what's acceptable, but then we will work with you all to restore it. But the main point that I want to make is I don't want to have you dealing with what could be higher unemployment, what could be any number of other microeconomic indicators, and then you're having to worry about us giving you an assessment. So if there is a need, we have the ability to do it gradually over years. And that's the point I wanted to make. I would not want it to be just a knee-jerk reaction where you're already dealing with a number of other areas, and then, hey, here comes the regulator. So we do have statutory flexibility when it comes to how and when. And I just want you guys to know that at least as long as I'm here, I want to make sure that we're very mindful in what we would impose upon you.
Thanks.
Oh, you're welcome. Can I talk about something else before we get to the next question? I've not seen as much of this in your state. And again, because you guys are some seasoned, wonderful leaders. And I love how it's a wonderful cross-section of state chartered and federally chartered credit unions. But again, those members, at the end of the day, they just want to have access. But I want to talk about a trend that I'm seeing in other areas of the country. And that is almost weekly, I'm getting data from my regional managers talking about mergers, where you'll have a $12 million merger, $12 million credit union that's maybe now going to be going to $100 million, $200 million credit union. The small institution, y'all, 15% capital, strong liquidity. But what's happened? There's not been any proper succession planning. There's not been any way at all for the board to really be able to groom or get someone else for that C-suite. So rather than go through the arduous process of getting a new leader, they decide to merge. So guys, whatever can be done to really encourage credit unions to do proper succession planning, to have good board governance and things of that nature. But to see credit unions just leaving their credit union just because of a lack of succession planning, it does concern me. So don't know if that's a trend that you all have seen there, Joe, or any of you there in Vermont, but it's something that I'm seeing play out throughout the credit union system. For the first time, credit unions now, we have less than 5,000. It's about 4,900. And again, there are some times when you may have issues that you do need to merge or do a voluntary merger, but the other times though, when it's just because of lack of planning. So don't see that happening in your state. Hope it doesn't, but I don't know if there's any feedback or anyone wants to respond to that. I mentioned that exclusively last week at the Q's conference.
Board Member Hood, this is Jean Guyard from Vermont Federal Credit Union.
Hi, Jean.
Thank you for meeting with us. I think the other part of the problem with very small credit unions is the amount of regulation and compliance that is coming through. It's very difficult to run a credit union with all of the staffing and member and other types of everyday ongoing without stopping to without have to also deal with all of the regulation that's coming through. So I was wondering from you, is there any support or more support coming for smaller credit unions in that area?
You know what? I'm hoping to provide smaller support. When I talked about financial inclusion, I talked about the role in many instances that it is those small credit unions. I know you all have two, I think, LIQ or low income designated credit unions there. We continue to provide support to them and our CDFIs through grants, through mentoring opportunities. I know that one of the things that we're thinking about is having a position available where someone is just going to mentor and coach those smaller credit unions. I love the fact that some of our larger banks, and don't laugh at this, but some of our larger banks like Citi, they have been providing their ATM services for free to some of our low-income designated credit unions and CDFIs. They, through CRA credits, have been able to invest in some of the back office support mechanisms. So those are some of the things we're working on. I definitely recognize things such as when we were able to exempt those small credit unions from CECL, those that are 10 million and under. So as you know, my whole approach to regulation is that it needs to be effective and not excessive, and how we need to look at risk commensurate with the size and complexity of the credit union. So I think we just need to continue to put resources, but not just throwing money at it, Gene, but making sure we have people who can really guide them. I also think that given our cooperative nature, I'd like to see more CUSOs providing services to those small credit unions. When I talk about fintech, for instance, a lot of the larger credit unions, like all of you, you all can go out and build your own technology, or just 3 of you could do something and you could be able to solve that issue. But some of the smaller ones don't have that ability or capability. So I'm hoping that the CUSO model can help with that. And also, you're right, more can be done from us around making sure when we are putting forth a new rule that we're looking at through the lens of the small credit unions. And we do have a group that looks at that called CURE, Credit Union Resource Expansion Team. So they're looking at these issues as well. And if I may, make sure that people are aware of the grants. I mentioned that we are a self-funded agency. The only funding that we get from the federal government is about $2 million that we get in grants from Treasury. And that is so that we can use it to provide grants, again, to those small credit unions, whether they be CDFIs or like yous. And I think you have 2 that are there in Vermont. Another thing that I want to throw out for you, you all, I try not to play into any of the rhetoric that you see coming out of the bank trade groups, whether it be ICBA or ABA. I know that they constantly are attacking credit unions. 1 month, it's because of our tax exemption. Well, we are not the IRS. We don't set tax policy. And credit unions, as I remind everyone, they're paying payroll taxes, real estate taxes, everything except where we're exempt is that, and that's from the federal income tax. So I remind folks that we are good citizens when it comes to paying all the appropriate taxes that we should. So I just want to make sure that you all know that I don't buy into the rhetoric of banks versus credit unions. I think a lot of their trade groups, because they don't have a lot of the legislative victories that they'd like, whenever they need to remind their members as to why they're paying dues, oh, gee, we need to come up with something. Let's pick on credit unions. Nowhere has that been more apparent. And I see Bob smiling at that. Bob, you know that's exactly what they do, Mr. Morgan. So what I've also been getting attacked on, not as much now since I'm not testifying before Congress, but you all remember when every hearing there would be a question about credit unions buying banks. Well, it's not as if credit unions there in Vermont are just going down to New Hampshire, knocking on doors with bags of cash. But actually what happens is many banks have decided to leave a lot of rural communities. They decided that they're just going to take up their shop and go focus on other areas. Credit unions tend to be the highest bidder because, one, credit unions are using cash and retained earnings. They're not offering stock for those transactions. But I just remind you, those are free market legal transactions. The FDIC has to provide its imprimatur at the same degree that we do. So I want you to know that, yes, there are about 30 or so of these transactions that have happened over the past 3 years, whereas there have been 300 bank-on-bank acquisitions just over the past year alone. So I just don't want any of that rhetoric to catch you by surprise. It is something that the banks love to say that credit unions are buying them like little Pac people or Pac-Man. That's not the case. These are structured transactions. They're legal, and there's nothing that says it can't be done. So any response to that, if you're seeing any of that activity there in Vermont or anything like that, and again, and by the way, it's not that the credit union buys the whole bank. They buy the assets and assume some of the liabilities, but they're not just buying the whole thing in one fell swoop anyway. Well, that's just a nuance, but don't know if that's rhetoric that you all are hearing there or not. Joe, is that something that's on the radar?
We haven't, to my knowledge, had any underlying activity in that area yet in Vermont. Of course, there's a limited number of banks in Vermont to begin with, and those that remain are the ones that haven't been acquired by larger, national or regional banks. But I find it kind of ironic that the trade associations on the banking side will comment that paint credit unions as the culprit here, wrongfully acquiring some bank or a portion of some bank, but make no comment about why did the management of that for-profit financial institution decide to sell its assets to a credit union instead of to another bank. They don't touch that part.
Well, of course not. That would defy logic.
Right.
Where you've been kind. I just recognized I may have gone over my time limit, and there is such a thing as my holding you captive and being captivating. And I think now I'm bordering on maybe holding you captive. So I just want to say thank you for your time, your candor. Joe, will I be seeing you and these fine leaders of yours at GAC, schedule permitting? Are you all coming down to Washington?
We are.
Kate's coming. Yes, Kate. Yes.
We will be there, whatever form it ends up ultimately taking at the end of February and into March. Some of us will be there. So
Joe,
yes,
if you guys are going to do a convening, will you please let me know? I'd love to come by and say hello. Who knows if our office will be open, but it's so much easier if you all are already downtown and I meet you somewhere. But I'd love to say hello, welcome you to town, and maybe talk about some other things that we may have already implemented by then. But at the end of the day, I'm just one that loves engagement. Yes, Zoom does work. It gets the job done. But at the end of the day, I just like to really see you in person. So you all have a wonderful, safe holiday with your families. Thanks for the hard work. I really meant what I said. Those great numbers that we're seeing in the credit union system overall would not have been possible without the 18 or so of credit unions that you all have there, that you all have put together, that you helped contribute to a lot of that success. So blessings to you all. And I look forward to seeing you in the new year. Take care, everyone.
Thank you very much.
See you soon. Bye-bye. And maybe soon I'll be back in Craftsbury doing some cross-country skiing. Bye.
All right. Thank you. And thank everybody for joining us today. I don't think we'll be connecting this way again before Christmas. So happy holidays to all of you. I wore my Christmas tie to note the occasion. So thank you. Be sure to call on us for anything at all. And we have another one of these scheduled with Kyle Hopman from the NCAA board going into the new year, January sometime, I think it is. We'll get a notice out on that very soon.
Great.
Thank you.
Thanks, Joe. Happy holidays.